Hey everyone, since the beginning of 2022, the IT sector has seen a major correction. While Nifty 50 index is down just 6% year to date, Nifty IT index had stand nearly 30%. Although there is some recovery in IT index that has jumped around 8.5% recently, still IT sector is down 23.57% year to date. That's a serious fall, and this fall is even higher at individual stock level. Top large cap IT stocks are down in the range of 20 to 50%. For example, TCS is down 14%, Infosys is down 21%, HCL down 23%, Wipro down 34%, Tech Mahindra down 36%. In fact, this correction is even brutal at mid-cap and small-cap level, and mid-cap and small-cap IT stocks are down in the range of 40 to 50%. For example, Mindtree down 38%, L&T Infotech down 43%, Persistent System down 23%. Tata Elxsi is the only stock that has fallen only 7% even after a huge correction in the IT and software stock. Birlasoft down 34%, Happiest Mind 38%, Newgen Software 48%, KPIT 26%, L&T Technology 39%, and Zensar down 47%. Now, I have been getting a lot of query and a lot of people are concerned about the correction in IT stocks because many people have very high allocation in IT stock. In fact, some people have as high as 50% allocation in IT sector. So naturally, this correction has created a huge panic. Now in this video, I want to discuss two things. First, I want to help you understand why the IT stocks have fallen between 20 to 50%. I have identified 4 reasons for this fall. And second, I want to discuss the silver lining in this fall. So this video would be helpful for a lot of investors who are invested in IT sector. Alright, let's get started. So the first reason for fall in IT stock is due to overvaluation. After the COVID, we saw a huge rally in the stock market, and this rally was even higher in IT sector. For reference, Nifty 50 saw a jump of 114% post-COVID lows, whereas Nifty IT sector saw a jump of 230% post-COVID lows. So basically, the IT sector jumped more than double than that of Nifty 50 index, and that made the IT sector stocks expensive. For example, before COVID, TCS used to trade in the PE range of 24-25, and post-COVID its PE jumped to 35 to 40. Infosys pre-COVID PE was in the range of 20 to 24 and jumped to 30 to 35. HCL PE was in the range of 14 to 15 and jumped to 22 to 26. Wipro PE was in the range of 15 to 20 and jumped to 26 to 30. Mindtree PE was in the range of 18 to 20 and jumped to 30 to 35. L&T Infotech PE was in the range of 18 to 20 and jumped to 35 to 40. In fact, Happiest Mind commanded a PE ratio of more than 100. KPIT PE jumped in the range of 60 to 70. So basically pre-COVID, IT stocks were available at very attractive valuation. But post-COVID, their valuation jumped a lot, and that made them a bit expensive. And when foreign investors saw huge profits from Indian IT sector, they made profit booking and exited. This resulted in fall in IT sector. So first reason for fall in IT sector was due to overvaluation. IT stocks jumped quite a lot post-COVID and became expensive and hence saw profit booking. Then second reason is due to falling operating margin. While lockdown during COVID negatively impacted a lot of sector, IT sector actually saw a positive impact because everyone shifted online. So rather than reducing the IT spend, business across the world increased their IT spend. Hence, IT sector saw a sharp jump in their order book, and that resulted in high top line in terms of revenue growth. Moreover, the operating margin of IT companies jumped significantly post-COVID because the travel was banned, and the travel in IT sector has a good amount of costing. Also, the entire discretionary spend got stopped. Hence, the cost for IT sector went down, that resulted in higher operating margin for IT companies, and that got reflected in its bottom line, that is profitability. All IT companies posted great profits post-COVID. But eventually when situation normalized, people started traveling and discretionary spend increased. That increased the operating cost for IT companies. Moreover, post-COVID, IT sector saw a huge demand for talent pool, and IT companies started hiring employees at very high packages. This resulted in sharp jump in attrition rate in IT sector. IT companies even gave bonuses and hiked the salaries to retain the talent. Due to all these factors, the cost went up and eventually the operating margin fell down. That got reflected in the bottom line. For example, Wipro margins were between 19 to 20% during FY 17 to 20, and then suddenly Wipro margin went up to 24% in FY 21. That was a sharp jump. And when things normalized, again the margin fell down to 21% in FY22. Likewise, HCL Tech margins were in the range of 22 to 24% between FY17 to 20, and suddenly in FY21 the margin zoomed to 27%. Again, when things normalized in FY22, margin fell down to 24%. So majority of IT companies operating margin shrank when economy normalized post-COVID due to reasons like high travel cost and of course high attrition and high employee cost. So that impacted the profit growth in recent quarters, and hence number 2 reason why IT stocks tumbled. Then third reason was due to the Q4 result lower than industry estimate. Now majority of brokerage houses keep a track of IT stocks result and they have their own calculation for quarterly result. So based on those calculations, they estimate the quarterly result and then compare it with the actual result. And apparently this time the IT company's Q4 result were not able to beat the street estimate, and that is one of the reasons for fall in their share price. Then fourth reason is bearish trend in the US. This is no secret that majority of revenue of IT companies come from North America, and America is facing a serious issue of high inflation, and the US Fed is trying hard to curb inflation by increasing the interest rate, and it seems that rising interest rate would result in slowdown in the US economy. And if that happens, there are chances that US companies cut down their discretionary IT spend on R&D and stuff. And if that happens, it will impact the top line and bottom line of IT companies. So that is also one of the concern for IT sector and hence one of the reason for sharp correction. Now, first silver lining in this fall is that IT companies have very strong order book. The rise in demand for IT companies can be measured from the sharp jump in their order book. For example, TCS order book for FY22 stood at $34.6 billion. In FY21, this order book was $31.6 billion. So there is an incremental jump of 9% in order book, and this order book is 123% of TCS revenue in FY22. HCL order book stood at $8.3 billion in FY22 against the order book of $7.3 billion in FY21. That's a growth of 14%. Likewise, Mindtree order book jump is 16%. So all the IT companies have seen a good jump in their order book that shows the high demand for IT projects. Number 2 silver lining is high profitability. All the IT stocks have very high profitability. TCS has 3-year average ROE of 40% and 3-year average ROCE of 50%. Infosys has 3-year average ROE of 27% and 3-year average ROCE of 35%. HCL has ROE of 22%, ROCE of 26%. Wipro ROE is 19%, ROCE is 21%. Tech Mahindra ROE is 20% and ROCE is 24%. Mindtree has ROE of 28% and ROCE of 35%. L&T Infotech has ROE of 29% and ROCE of 36%. Persistent System has ROE of 17% and ROCE of 22%. Tata Elxsi ROE is 32% and ROCE is 42%. Birlasoft has ROE of 16%, ROCE of 22%. Happiest Minds ROE of 39% and ROCE 35%. Newgen Software has ROE of 19%, ROCE of 24%. KPIT ROE is 17% and ROCE is 19%. L&T Technology has ROE of 25% and ROCE of 35%. Zensar has ROE of 15% and ROCE of 21%. That's a very high margin. So that shows that IT companies are highly profitable. The number 3rd silver lining is low to negligible debt level. IT stocks have one of the lowest debt to equity structure and majority of them are completely debt free. TCS debt to equity is 0.09, Infosys debt to equity is 0.07, HCL is 0.1, Wipro is 0.27, Tech Mahindra 0.1, Mindtree 0.1, L&T Infotech 0.09, Persistent 0.17, Tata Elxsi 0.09, Birlasoft 0.05, Happiest Minds 0.37, Newgen Software 0.03, KPIT 0.17, L&T Technology 0.11, Zensar 0.12. So financially, IT companies have good revenue and profit growth, high profitability and negligible debt levels. Then number 4 silver lining is highly attractive valuation. After this recent correction, majority of IT stocks are available at very attractive valuation. TCS latest PE is 33.2, Infosys PE is 29, HCL is 21, Wipro is 21.4, Tech Mahindra is 18.3, Mindtree is 30.7, L&T Infotech is 33, Persistent System 42, Tata Elxsi is still commanding a premium with PE of 95, Birlasoft P is 23, Happiest Mind P is 75, Newgen Software is 16.4, KPIT is 55, L&T Technology is 39.5 and Zensar is 16.8. So valuation wise, majority of IT stocks are available at very attractive valuation. And the final silver lining is that future is digital. If we try to look at the long-term bigger picture, the future is digital. You can't neglect this fact. So in the short term, there might be challenges like high attrition rate, higher cost, etc. But the long-term prospects are bright. These short-term challenges will eventually fade away, and the fact is that billions of dollars of money would be spent on IT and tech in the future. Right from technologies like cloud computing, advanced analytics, AI and ML, big data, so on and so forth. So the long-term growth prospects of IT sector in India are very bright. Because India is the leader in the world in IT sector. We provide the IT services at much lower price than that of US, and we have the right leadership and the talent pool to cater to ever-growing demand for technology. So Indian IT sector is going to enjoy a big pie in the global IT spend in the future and would eventually get reflected in the share price. We also have the coverage of various brokerage houses on IT sector. For example, recently Macquarie has initiated a coverage on IT stocks and says that the worries over demand are overdone and that the S&P 500 revenue and technology spending correlation with IT services is not going to hold, as IT spending is expected to be far more resilient. It has given outperformance rating on large cap IT stocks. TCS has upside potential of 28.5%, Infosys with 40.5% upside, HCL with 38%, Wipro with 38% and Tech Mahindra with 50.5% upside potential. In fact, majority of brokerage firms have a buy target on IT stocks with a good upside potential. So in this video, we discussed the reason why IT stocks have corrected in the range of 20 to 50%. The biggest reason was due to overvaluation and hence profit booking. And the fact that there are concerns over slowdown in North America that might impact the business of IT companies, as around 70% business for IT companies come from North America. Having said this, as we discussed, these IT companies are fundamentally super strong with good revenue and profit growth, high profitability, negligible debt level and good amount of free cash flow. And now that there's a good correction, these IT companies are available at good valuation. So for me, every dip in IT stock is a buy opportunity for long-term wealth creation. I strongly believe that the future is digital and Indian IT companies command leadership in the world and hence bound to grow from this immense opportunity, especially in the newest digital technologies like cloud computing, AI and ML, advanced analytics, etc. Even majority of brokerage houses are bullish on IT sector. In fact, IT index has already seen a sharp recovery and jumped 8.5% in last few trading sessions. So any fall in IT sector is an opportunity to accumulate these stocks for long-term wealth creation. Having said this, I would strongly suggest that do not have a very high allocation in IT stocks. It is very important to diversify across sectors to reduce sector concentration risk. Now tell me in the comment how much percent IT sector contributes in your portfolio and which IT stocks are you buying in this dip. I hope you'll find this video useful. I'll see you next video. Till then, take care.